Welcome to Insights for IT Negotiations, a podcast by UpperEdge, a leading IT sourcing, negotiation, and project execution advisory firm. I'm John Belden, UpperEdge's Chief Research and Strategy Officer.
And I'm Kylie Chisholm, UpperEdge's Marketing Manager. Join us every other week as we share insights to help you maximize the value of your key IT relationships. In each episode, we'll delve into the topics that matter most to IT decision makers and sourcing professionals. Hey John, how are you doing today?
I'm doing great, Kylie. Happy 4th of July.
Happy 4th of July. Yes, this episode is technically going out the week after the 4th of July, but to break the fourth wall a little bit for our listeners, today is July 3rd, so the anticipation is still here. But before we, go to our 4th of July plans, we have a really exciting episode ahead of us. We actually, if you've been following along with UpperEdge's content and our social media posts, you may have seen we did a webinar recently on Oracle Cloud Infrastructure and Oracle's Universal Credits model. We had our two Oracle expert advisors helping out with that, giving a great presentation. And so we are actually joined today by one of those advisors, Shane Griffin, to talk a little bit more about that and sort of dig into the weeds a little bit for that discussion. Hopefully, our listeners will head on over to that webinar after the fact to dive even deeper into it. But Shane, thanks for joining us on the show.
Thanks for having me.
Yeah. Thanks again, Shane. We appreciate it. We know that you guys have been busy. So before we get started, why don't you give us a little bit of background on your role with UpperEdge and kind of what you do as a sourcing advisor?
Yeah, sure thing. So this is actually coming up on 4 total years with UpperEdge. It's my second tenure here. Originally, I was sort of an entry-level sourcing advisor, and now after getting a bunch more years of experience in procurement, came back as a practice manager. I work on a team that covers Oracle, Workday, and then just kind of the general mid-market, really anything that fits in that segment. And we help negotiate software deals, cloud deals, and then the related services deals that would be implementing those software, and just helping customers shape their negotiation strategy and help them get the best deal possible.
Yeah, just a little bit about the practice itself, Shane. I mean, what are the size of the deals that we deal with there, right? I mean, are they big deals? Are they small deals? I mean, in general, can you give us a little bit of color about the business itself?
Yeah. So, I mean, broadly speaking, I suppose you could say they are mostly big deals, right? And that's where generally there's the most leverage and the most ability to play around with getting better discounting and things like that. But we did more recently make the move into the mid market where we will start to see a little bit smaller deals. And that's, I guess, relatively speaking, these aren't tiny, $10,000 a year deals. We're still talking in the hundreds of thousands to millions of dollars.
Yeah, what's a big deal for me might not be a big deal for somebody else, right? So I think
Exactly.
from the standpoint of, kind of defining the mid-market, what constitutes the mid-market for our clients?
Yeah, we're still figuring out exactly what we want mid-market to mean. I think, if you look up the definition of, let's say, SMB, it kind of ranges, right? Some of those businesses can be quite small. I mean, our general area of playing around is in annual revenue of north of $1 billion. That's like our typical customer base.
Right.
But now we're starting to dip below $1 billion in annual revenue all the way down to like the low hundreds of millions.
Okay.
But we're still defining what makes the most sense and trying to cater our offerings to those types of customers as well.
Yeah, and recognizing that those, I'll call it mid-market customers, are getting a lot more sophisticated in their negotiations as they go forward as well, because the complexity of the infrastructure that they're dealing with is just as complex as the big boys now, right? And so therefore, they need to be, I'll call it, armed with negotiating power similar to what the big boys got.
Exactly.
So I know that we're here to people are going to be listening to talk about OCI, but let me just set a little bit of background here and put it into some level of context. From my understanding, OCI, a product of Oracle, is involved, or call it incorporated into what roughly would be 75% of their revenue, which would be their recurring services, right? So it's license support and OCI. And OCI represents about a third of that recurring revenue. So it's legitimately a big part of Oracle's business, this OCI piece is. OCI is not the big fish out there, though, in terms of cloud services. That would clearly be, let's say, Amazon and Microsoft, because from my understanding, Oracle's probably about 1/5 of the size in terms of the revenue of those two guys. But from their earnings announcement, I saw that they had like a 53% uplift year over year in those cloud services. So while they may not be the biggest, they're growing the fastest, because if you look at those year over year revenues compared to those other guys, they clearly have got something going on there
Hmm.
that's making them more attractive. So maybe we can just start off with kind of the question on what's included in this ecosystem of OCI, and what makes it up in general.
Yeah. So, I mean, OCI's what it's comprised of, it's pretty analogous to what you mentioned: Amazon, Microsoft Azure, GCP. It's the infrastructure side, infrastructure as a service, and then the tools that you would use to manage your infrastructure, which Oracle refers to as platform as a service. Infrastructure as a service is fairly simple because it's the infrastructure, right? It's that foundational layer of where you store your data and your software that you're utilizing, all that good stuff. The platform side is it's a multitude of tools. You're talking integration tools, rolling out security updates and things like that. Everything to manage that environment that you have hosted on their infrastructure.
So can you give us some examples of the tools names for people that are listening to it? They said, okay, when he's talking about tools, what does he mean exactly, right? What's in the Oracle bomb that
Yeah.
kind of constitutes tools?
Yeah, data migration tools, app security, app monitoring, all the types of things that you would utilize, from an on-premise perspective to manage your tools, all hosted in the cloud. And then the big one I'd probably want to call out the most is maybe their autonomous database,
Okay.
which is, and I want to call it out more so because Oracle is really harping on it, and it's a big deal for them. It's got counterparts with a lot of the other platform as a service capabilities, except those capabilities are run by themselves. They're run it's in the name, autonomously. So it removes human intervention. So if you need to install new software on your infrastructure, the autonomous database capabilities can do it for you. Getting rid of errors from human touch, eliminating costs. You could potentially reduce headcount with it. But it is what Oracle's really pushing, and they use it themselves. So, for example, if you're a Fusion customer right now and you don't use OCI, you're taking advantage of OCI. Oracle's managing your SaaS applications on their infrastructure and utilizing autonomous database in the background to manage it.
And I go back a long way, as you know, Shane, right? And if you wanted to say, if somebody were to ask, 40 years ago or 30 years ago, what does Oracle do? Well, there was only one answer. It was
Database.
databases,
Yeah.
right? That's what they did, right? So to a certain extent, the core of their offering, that autonomous database, still is in their DNA, right? In terms of who they are and what their value proposition is. And then so that explains a little bit about I'll call it the nature of the services. Do you have any insights as to what's driving the growth? Why are people actually going to Oracle for these services if Amazon and Microsoft are out there with their big guns?
Yeah, I think there's probably a few different reasons. One, I mean, the general move to the cloud is just a continuous movement right now. So Oracle is obviously able to capture customers moving that way, especially customers that they already have in other areas, right? They can speak directly to them as part of renewal discussions and things like that. So they're able to capture those customers. But as you said, John, is a kind of a good segue with Oracle's strength being in the database world. Their suite of tools are very strong, especially including autonomous database. And I think you mentioned the sales call or the earnings call the other day. Um, a big thing Ellison was pushing was that they're wanting to now partner with the other cloud providers. I think the old way of Oracle doing business was, let's get them on our platforms, right? Get them using our services. But now the focus is more about just general cloud connectivity across the whole vendor spectrum. So, for
Hmm.
example, they have a partnership with Azure. It's called Database at Azure, where if you're an Azure infrastructure user, but you would like to be able to utilize Oracle's past services, you can do that in Azure Cloud. you can utilize autonomous database, for example, in Azure Cloud through their database at Azure offering. So they're doing this. They just signed on with to do something similar with GCP as well. And I think the goal is to really work with all cloud providers because they want the cohesiveness with the cloud and not have all these siloed offerings where data doesn't speak as well across the different platforms.
Did you know that UpperEdge offers subscription advisory services? This on-demand solution provides essential benchmarks and market insights specific to your business needs precisely when you need it, empowering you and your team to make informed decisions for your IT initiatives. Position your team for success. Reach out today via the link in the show notes to learn more.
One of the things, Shane, that uh, people that have listened to this podcast know, I've been doing a lot of research on generative AI. And when I look at Oracle in particular, I think Oracle stands, they're in really good position and they haven't exploited it to the extent that I think that they will or can exploit it. But they own the entire stack from top to bottom. The applications, I'll call it the ability to build LLMs, the databases that are needed to support it, the application infrastructure, and to a certain extent, even the servers themselves. Let's call it the chipsets. They can have a vertically integrated offering of generative AI technologies, I'll call it, to the clients. And I don't know if they've pushed that yet, right? But I think they're in a better position than any other big software vendor out there to make jack here. Any comments on that? Are you seeing anything in there? I know I'm off the topic of OCI a little bit.
Yeah, well, I think what I could speak to is just kind of reinforcing what you're saying, the position they're in. Because if you roll it back a ways, Oracle was kind of behind the eight ball as it related to cloud. They were kind of a little late to the game, and they've been playing catch up, which I think speaks to the fact that they're not the biggest shareholder of the market, right? They're earning that infrastructure, but the things they've built foundationally totally support what you're saying as far as them being in a good position to take advantage of AI. I agree that it hasn't been as big of a push, at least from what we've heard from our customers. But I can't imagine it's too far away at this point, considering the direction the market's going.
Well, they got a boost. I'm going to call it their stock price. It went up about 25% as a result of the earnings call, right?
Yeah.
And if I was kind of measure if I were to measure them, let's say against ServiceNow, right? Who's I'll call it big in the marketplace in terms of the generative AI. I
Mhm.
would say, at least from my perspective, Oracle's got another 25 points to go just to catch up with ServiceNow. So I still think there's a lot of growth there, and I'll be really interested to see what the next earning announcement brings.
I would agree. I think they're already projecting that cloud growth you mentioned before, the 53% or whatever it was, it's going to look like that for the next couple of quarters. It seems
Yeah,
like.
I agree with you. I want to go back to the webinar because one of the subjects that got brought up in the webinar, which I thought was really interesting, was this concept of Oracle universal credits. Now,
Mhm.
I'm sure they're only good for Oracle, right? I can't take those universal credits and use them anywhere with the industry. But can you kind of talk to us about what these universal credits are, and kind of just take away the mystery there?
Yeah, no, you're right. It's not like a universal television remote where it works with any brand television. Yeah, so the universal credits, it's their consumption purchasing model. Um, I mean, if you compare it to, obviously, it's not traditional SaaS, which is almost a pure subscription play, but it's even different than some other consumption models in the market. So to kind of summarize it, so you commit to a pool of credits. Okay, each credit is $1, no matter what. It's always going to be $1 per credit. What you do negotiate is the rate at which you consume those dollar credits against the products and services that are under OCI. Okay,
Okay.
and that's all dependent upon how much leverage you have, how much usage, the duration of the commitment that you're making. But ultimately, it's a minimum of 1 year commitment. And month over month, as you consume credits, you just draw down off of that pool. They are use it or lose it, but the key part that kind of differentiates it from some other consumption models is the fact that you can use those $1 credits towards any pass or IaaS service that Oracle has
Mhm.
under OCI, which is kind of unique. And I think it's smart. I think it's the way other companies should do it as well. Because Oracle's viewpoint is we don't care what you use as long as you're using something, because they just want to get your foot in the door using OCI. And then from there,
Right.
they know it's pretty sticky. They're going to grow you from there.
Well, and it also, at least from my standpoint, then that would um, I mean, that clearly helps out with revenue predictability for Oracle, right? Because if I'm buying these, I'll call it universal credits, and we're just talking about, how I can consume those credits, the amount of revenue is fixed, right? I
Correct.
mean, I've paid for that
Minimum.
already.
It's
I
a
mean, now
minimum.
I'm paying. Yeah, I mean,
Yeah.
so it's fixed. I don't have to worry about uncertainty associated with, oh, they're not gonna use everything that they may have paid for, right? And so
Hmm.
therefore, at least from that standpoint, to me, that makes perfect sense.
Yeah.
Um, so I want to take a step back now and think about negotiating with Oracle in general, right?
Hmm.
And I know I go back in my old days. It was funny that when we were trying to think about putting in Oracle as an ERP platform,
Hmm.
right? Oracle ultimately said, "Hey, listen, we'll give you the software if you just buy the services and and pay the maintenance. We'll give you the software for free, right?" And that was kind of the strategy. Now that's obviously 20 years ago,
Right.
So if we're thinking about, let's say I'm a new CIO, or I've never negotiated with Oracle before, right? What is it that I should know about Oracle as I set my negotiations up?
Yeah, so there's a bunch of things to consider. I mean, first thing to just keep in mind when you're dealing with Oracle, they are tough in the negotiating room. You got to have your ducks in a row. So in that respect, there's a sort of some major bucket areas you should be aware of. So I would say you really need a good, especially with OCI, you really need a good handle on your consumption and your requirements, because I mean, you want to get that first big commitment done correctly, because you're kind of setting the precedent of what that pricing is going to be going forward. And if you make a, let's say, very conservative, overly conservative commitment on universal credits, you're kind of setting that stake in the ground of where you're starting from on the next renewal, right? So what that can mean is, let's say if you're highly confident in your requirements and your consumption, great, proceed to the next step, right? But if you're not sure how much you're going to need, you don't want to just wing it and buy a bunch of credits. You should probably do more like hit pause, do some proof of concept, do some testing with the different tools, get a better handle of what you need, because that's going to set you up for the next step, which is, if you're an existing customer of Oracle, what's the rest of your footprint look like? Do you have a renewal coming up? Did Oracle hit you with an audit saying, hey, you need to buy more Java licenses? Can you combine that with a OCI universal credit deal? So just kind of getting that holistic look at your overall relationship. And then timing considerations. You want to make sure you have enough time to negotiate the deal. You also want to be aware of where it sits within Oracle's calendar year, the quarter end, year end. That's where you're going to get that best deal. But all of that is to say, you want to make sure you're lining everything up to get the best deal possible. And there's a lot of factors to consider there.
Well, will Oracle work with you on helping you establish kind of what that consumption rate's going to be? I mean, are they cooperative there?
They are. I mean, I would say if you're an existing cloud user, let's say just something other than Oracle, obviously you should be able to see what kind of consumption you're doing elsewhere. But if you're new into the cloud and you don't really know yet, yeah, they will, because going back to what I said before, they just want to get your foot in the door with OCI, because they
Hmm.
know once you start using it, you're just going to grow from there. A lot of their growth comes from existing customers with OCI.
Okay.
Which is a huge deal for them. And so they would almost rather do a tiny little pay as you go deal, because they know it's going to lead to something bigger downstream.
Okay. And then when you're negotiating with Oracle, is it typically I've got an Oracle salesman for everything at Oracle for my account, or are they segmented to say, no, there's a guy that sells software, there's a guy that sells services, there's a guy that sells cloud services?
So a lot of times, and we haven't seen too many, let's say, multifaceted Oracle deals where there's big components of OCI, big components of SaaS mixed together. So I'd be interested to see the variety of ways they approach you. But generally speaking, you're going to be working with your account person, but they're going to be liaising with people from the different parts of their organization as they need to. And this applies not beyond OCI. This is even in their SaaS organization. If you're a standard ERP user as well as, let's say, retail, you're
Hmm.
going to have to get approvals from the retail chain of approvals as well. So they are kind of segmented in that respect, but it does ultimately funnel through a single person. But they wouldn't be the one person approving everything. They have to go to those other people internally.
So we'll wrap it up here, Shane, with one big question, right? which is if there's one thing, and I know you talked about a lot of stuff at the in the webinar, but if there's one thing for OCI that you wanted to send a message to our clients and say, you got to get this right, what would that be?
I would say you're getting your commitment right, the amount of the quantity and the duration of the commitment, right? And that obviously all comes down to your confidence level in your requirements. But the reason I say that, it's maybe a really simple reason. If you overbuy, it's all use it or lose it credits. So if you overbuy, obviously that's just money you're throwing out the door. If you severely underbuy, you might be giving up some discounting, but obviously it's a little bit safer. But really just getting it right, because that is your first big step into committing to OCI with Oracle. And as I said before, getting that first big deal correct is going to set you up for your future renewals.
So, well, Shane, once again, I want to thank you for taking the time out of your day to spend with Kylie and myself. Kylie, you let the audience know how they can get more information and maybe what's coming up for UpperEdge in the future.
Yeah, sure. Thank you again, Shane, for joining us. Like I said at the beginning of the episode, so we did have a webinar on this very topic. So that live webinar is over, but you can now download it at UpperEdge.com. That webinar is called Unraveling Oracle's OCI in Universal Credit Model. So you can find that online at UpperEdge.com under our webinars section. And then we also have another webinar coming up at the end of this month with none other than John himself. That is Vendor AI-enabled delivery models, extracting value from your IT suppliers. So definitely register for that if you're interested in learning a bit more about generative AI, some of the research that John alluded to during the episode, and diving deep into that topic. But thank you everyone for listening. We hope you found this helpful, and definitely check out the episode description for more Oracle resources and resources related to UpperEdge. And thank you, John and Shane, for your time.